Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on RobinHood, ticker HOOD. Reason for this is I actually want to do some analysis on newer listed stocks, ones that have IPO'd in at least not a year ago. So, you know, within the past year. So really we're going to actually upload two videos today, the first one being on RobinHood, and then we're going to do one on TPG, which is a large private equity firm that has recently gone public. So they're going to be the two videos you're going to see up today and be analysed. So to get straight into it, as always, we do start off on a clean daily chart because we like to look for gaps, as again we can use these as future price targets, and we do currently have a gap at around $39.50 on RobinHood, and we can see that's really the only obvious gaps. There may be some small gaps between here, but nothing that stands out very easily. So really the only target we're looking at from a gap fill perspective is going to be this $39.50 target. But as you can see now on RobinHood, obviously on its IPO it moved up massively. If we go to its IPO price of around $38, we can see at its peak it did jump. Well, we can't actually see that because it's not letting me see, but we can see that it moved up 125%. So that's one thing to take into account, because that has now kind of skewed these deviations, because all standard deviation is calculating all the price and then kind of seeing where data should fit. So this has made it harder to kind of look at RobinHood from at least a standard deviation perspective and start getting some targets, just because you can see the difference between the deviations are so big. It's 43 cents to 25 cents just for the first deviations, and so it's going to be very hard to trade off a standard deviation perspective. So more what we're looking at is kind of just targets where we start seeing price move, and so the first one being that is actually kind of near where we are now, and that's kind of this $13 area. The reason for that is statistical mean on the 4 hour, and we can see at 13.30, which is kind of on that next target, is that statistical mean on the daily. So these are areas where if RobinHood, as we can kind of see today, if it came into this level, is that coming into these levels we're going to most likely struggle. So you can see kind of happened today, we kind of a bit before that level, but either way these levels are going to be key. So definitely important to be looking at these levels, because, and you can even see here is kind of where they will kind of consolidate in. If it's kind of staying below, it may retest and fail. If so, obviously price is going to continue lower, but if it can break and hold above 13.45, then it would be something that we could see RobinHood continue upwards from there, but it would be breaking through this kind of 13.45, coming back, retesting it, and then seeing a break of high, and then we would expect kind of RobinHood to continue up from there. And then where would our targets be? Again, we don't usually use half deviations as targets, but because our other deviations are so far off, we're going to be having to looking at half deviations. That does mean our first kind of key target would be towards this $19.50 mark. You can see that we haven't been there really that recently, but either way that is kind of the area that we'd be looking to trade to. So if we break above this 13.50, come back, retest, and it's kind of confirming that it's going to go higher, our key target forwards will be $19.50. Obviously you're going to have some resistance, and you can use these for targets depending on if you're day trading or swing trading. Is looking at these psychological levels. So you know, you've obviously got the $15 to $16, 17, also 17.50 will be a key one, $18, $19, and then kind of our key target of 19.50. So these are all areas, once we kind of show confirmations, areas to be looking at. And then if we do continue higher, I mean at this point if we got here we'll probably have an updated video, but if we don't for any reason, if it continues higher, we'll then be looking at that first deviation as kind of a key level of resistance, and we can see right now that that's around $25. So if price got there, that's where we would start being definitely locking in the majority of profits, if not all, and start having a bit more of a bearish perspective on it from that level. Obviously though, we do still have a gap fill at $39.50. But obviously that is a far way away from where we are now. That would be, you know, a 300% increase. So not something we're even going to really look to trade. If we're looking to get those kind of returns, it's usually not on shares, be using some sort of a derivative such as options. But either way, that is kind of the breakdown on Robinhood. Again, we can't do proper analysis as we would on stocks that have IPO'd at least a year ago, because then we have enough data to kind of be able to give a in-depth analysis. But either way, this is kind of the best we can do with what we've got. So I hope you enjoyed the breakdown on Robinhood. Hope to see you in the next one, and that's it. Peace.
I go dumb for that money, dumb for that money. Profit on top of profit, Donald Trump kind of money, okay?